Marcel, thanks for your time, very much appreciated. So we're here at the Sandton Sun, and of course you're busy showing us around in terms of the refurbishments that you've done, but this is obviously a part of a bigger strategy. Maybe just talk us through some of the developments that you've got lined up.
So we've had a view of investing capital in our business, in our existing business for a while now, and we've done that both across gaming and hotels. Both markets are obviously quite tough. You've got consumer market in gaming, and you've got the corporate travel, the business travel in hotels. That's all been under pressure. But we've got really great product, really great location, good distribution, and we've taken a view that to invest in that, in expanding, in renovating, in modernizing, is probably one of the better ways we can invest our capital. And what you don't want to be doing is renovating a hotel when you're at peak demand, because then obviously you lose the room stock. So we've gone through the portfolio, addressed a lot of the legacy issues. Some of it's not all guest facing, some of it's quite painful. You've got to do core infrastructure. You know, in this hotel was a case in point where you had bathrooms that were 30 years old. So you've got to then shut the hotel down, strip it all down to base, redo electrics, redo plumbing. But when you're finished, you're good for a long run. These are long-term investments, and we see that ultimately demand will pick up. And in all of these investments that we've made, whether it be in capacity expansion or renovation, we've said if we're wrong, we're early. The uptick will come. Maybe we're investing a bit too early, but we're okay with that.
In terms of your revenue split, you mentioned that more than 70% is made up of your gaming industry, and the other one comes from your hotel stays. Let's maybe focus on the gaming industry for some time. HCR, I think the chief executive had mentioned that there's huge potential here, but the regulatory framework is still a little uncertain. Can you maybe give us an idea of just the give us the lay of the land of the
From a regulatory side, there's different aspects to gaming. So we're in Tsogo, we're involved in casino gaming. Your large traditional style casinos, Monte Casino, Silver Star, Gold Reef, that type of thing. The regulatory framework is pretty mature. There are 40 licenses in issue. I think 36 of them are trading. There's not a lot of shift in that. Where the uncertainty comes around is, and quite a bit of conflict, is around alternative forms of gambling. So you've got limited payout machines, you've got electronic bingo, which is something that a lot of us in the industry are quite opposed to. And then you've got your sports betting and so on, which all have their space and are growing. And as those newer forms of gambling are rolled out, there's a lot of conflict between what the regulators aim to achieve, between looking after the social good, because a lot of that type of gambling does affect the poor, whereas we certainly argue that mainline casinos don't, because of the location of where they are and the nature of the customer and so on. So that area is an area that's in dispute, but it's not unusual for the industry. And your large casino operations are pretty stable. There's some shifts coming through in our environment. Sun International are building a new casino in Pretoria, Menlyn Main, where they're relocating their Marula operation into Pretoria. That is going to have an impact on some of our operations because we service that market at the moment. Negatively, yeah, because there are some people that then you don't drive past one casino to go to another. So if you're currently going to Monte Casino or to Empress out at the airport and you live in Pretoria, you're going to go to the Pretoria Casino. But not material sort of numbers, it's just a shift in the market. And then obviously we're looking to relocate, if we can, one of our smaller casinos into the Cape Town metropole with the expiration some 5 years ago of Sun International's exclusivity there. So there'll be some sort of shift in the larger balance, shall we say, but not very material. Our biggest issues in this industry is slow growth. Because we are so consumer focused and it's entertainment spend, when over long term, casino win should grow by nominal GDP, so inflation plus GDP. It never tracks that. When people are feeling really good and the environment is all positive, you grow faster. And when things are negative and everybody's feeling depressed, you grow slower. And that's the environment we're in at the moment. Last year we saw casino win growth of 2%, which is clearly well below inflation. And that's tough because that affects your margins and affects your profitability in that year, especially when you're doing 7.5% wage increases. But these are trends, and you've just got to get through that wave. And what we've been quite focused on is not cutting back on our investment and expansion activity because of short-term fear. If I go back to what I said earlier, if we're wrong, we're early. it will turn, and we're focused on that.
In terms of your numbers, I mean, there's something that we as the general public may be happy about. Government spending's gone down. Not necessarily good news for you there, though.
No, exactly. I'm torn. As a taxpayer, I'm delighted that government's exercising some austerity on some of their spend. As a hotelier, I'm not that happy they decided to save in hotel trade, of all things. We said in our last year-end results that came out, in the year to March 15, we lost about 100,000 government room nights out of a total of about 300,000. And that is an austerity measure they've just pulled back. It's cyclical like corporates. And as a taxpayer, it's the right thing. I mean, they need that austerity in there. It has recovered a little bit, but not dramatically so. It was particularly bad last year because of the elections effect. So you get a seizure of government during that. So I think that effect's shown a bit of growth in this year because you don't have a repeat of the elections. But government is focusing on that. And I mean, the Minister of Finance announced that in Parliament, an area he wants to control. So it's something we must just deal with. It's just part of the bigger story that we're in a low demand or below normal demand environment.
There seems to be some reprieve, though, for the tourism or the hotel industry with these visa regulations that have been relocked. What is your outlook for the festive season coming up? So
look, the visa debacle is not solved quick enough for this season. This season, from an international tourism, whatever impact was going to have is going to happen. There's going to be no change on that. What we're hoping is, because it's now being addressed, is that by next season that will recover. All that said, our season is actually looking quite good this year, but it's very local driven. So we've got strong demand in Durban. Our peak weeks are already basically full. We had our summer sale came out last week, I think it was launched, very strong demand. The sales revenue on the sale was about 20% up on last year. So we think we're going to have a good season. What we don't know is what the impact will be in markets like Cape Town that relied very much on that international tour business coming through that would have been lost.
You mentioned that the weaker currency is twofold for you. Good in one aspect and negative in some. What do you mean by that?
So in our business, we've got quite a good Africa expansion business model that we're running up there. We're in 8 African countries. That's showing very strong growth this year. We had our hotel in Mozambique closed last year for renovations. So obviously there's a non-repeat factor there. But our African properties earned ultimately dollar revenue streams. Translating those at a weaker exchange rate means our rand profits go up very strongly. So that's been good for us. For South Africa as a tourist destination, both your traditional leisure as well as things like shopping from the African market and so on, a weak rand is very good. When you see the rand strengthen, that market disappears to Dubai or Singapore, and when the rand weakens, that market comes to Sandton and so on. So those are positives. On the negative side, you do a lot of imported capital equipment. Nearly all slot machines are manufactured internationally, priced in dollars. So what we gain on the income statement, we can lose on the cash flow quite quickly because we have a high capex program, and a lot of that cost just runs.
What is the split going to look like in, say, the next 5 years or so when it comes to how you deploy your cash in South Africa versus the rest of the African continent?
So Africa is a great opportunity for us. I know the Africa story's gone off the boil a lot with institutional investors and so on, but we've been in it for 20 years and we remain in it. But they are small markets. So when we did our expansion in Maputo, we added 110 rooms to a 160-room hotel, and it's significantly changed the Maputo market. Now, if I'd say add 300 rooms or 500 rooms to Sandton tomorrow, no one would notice. So they are quite small markets, but they're quite niche, and we continue to focus on them opportunistically. So we will continue to put money into it, but it by the nature of it can't be as big as our investment in South Africa. And our split between gaming and hotels is also the same way. Hotels, we do a lot more transactions because they're smaller type transactions. Gaming, you have lesser, but of bigger quantum. And our balance of our business has been roughly 70-30 gaming hotels for a while, and I think it's going to stay that way. And then of our hotel business, 25% of it or so is offshore. The one part that we are quite interested in, we bought a stake in Redefine BDL, a management company in the UK. Our partners are Redefine South Africa and International. And then we've listed this international hotel group on Luxembourg and the JSE. And ultimately, that will allow you to buy portfolios of hotels in the UK primarily and in Western Europe. And I think we could be deploying some capital there in quite interesting investments. Again, it's not something relative to the scale of our group that's going to be a dramatic shift, but it's another avenue where I think we can do quite well, having invested in a management team and a focused acquisition team there.
You're currently in the Nigerian market too, and of course there are a lot of constraints there. You're dealing with power shortages here in South Africa, although to some extent Van Molefe has reassured us that we won't be seeing load shedding at least for some time until April or so. But we're faced with another situation, such as water restrictions. How are you going to be managing this? Because you are operating in jurisdictions where there is a scarcity of resources.
Been a theme in our business for quite a few years that the administered cost has increased dramatically, both in terms of direct administered costs from government, so your rates bill going up, your price of electricity going up, but also because of the lack of availability of these things. So we've spent hundreds of millions on generator capacity. All our properties are fully under generator. We can be self-sufficient on power. That obviously pushes up your cost because diesel's more expensive to run on than Eskom power. But we have to have that ability. You can't have a skyscraper hotel, you can't operate the lifts. All our casino properties are under our own power supply if we need to be. We've put a lot of money into water storage capacity, so we can run for 3 or 4 days if the municipal water system goes off. We cannot produce water, so we can't be the completely self-sufficient in that, but we can manage the shocks in between. In areas like Malahleni in Witbank in Mpumalanga, the water infrastructure is in crisis. And we had to put down boreholes and so on to become self-sufficient by and large, simply because the water infrastructure of the municipality was so decayed. So it is a difficult environment, and it used to be something that was unique to our African portfolio. And when we built hotels in Mozambique and in Nigeria and so on, you built completely and utterly self-reliant. And if you got government supplied electricity, that was a bonus. It wasn't a feature in our South African hotels, and we're slowly putting that infrastructure in here because of the shortage of those resources from the state.
So 3-4 days is what you'll be able to function on if there's restrictions.
Yeah. But we can't go off the grid yet. You know, it's the same as electricity. You can run on generators for a while, but ultimately you run on diesel. You need the state system to work, but you build in buffers that short-term problems can be solved. And quite frankly, if a city like Johannesburg or something ran out of water for 4 days, that crisis will be far more traumatic than simply the hotels not having water. It will be the least of everyone's problems. But it's stuff that we've had to cater for.
Marcel, just to close off with, there were several surveys that have been conducted over the past couple of months talking about sentiment among chief executives or chief financial officers said to be sitting at all-time lows. How are you feeling about the state of South Africa at the moment? Is it worrying you?
Yeah, I mean, you can't help but be worried. So there's a lot of negative rhetoric around. There's a lot of bad economic news. As I said, if you talk to economists and you talk to the media, you're ready to slit your wrists. All of that said, I still think this is like one of the greatest opportunities personally I could ever have. To have a company like this that has a strong business, has excellent skills, has products both in gaming and hotels that are in great locations and so on. If you can look through the cycle, and cycles do come and go, our upside is just enormous. We've just got to be able to make ourselves protected and bulletproof in the intervening period, because it doesn't mean that it can't be hard for much longer. And we don't want to go into things like retrenchments. We've gone through this entire recession with no retrenchments. We've given our staff at least cost of living increases every year. You just got to manage the business as much as you can to say, look, if it's tough for longer, can we withstand it? We are also very fortunate. We're not in mining. We don't have the commodity inputs that mining has, where your price per ton of iron ore was X and now it's half of that. So we don't have that kind of decline. Our problem is slow growth as opposed to decline, and just making sure we don't do anything silly.